You are with Neo Home Loans, and you are Premier Plus Realty's preferred lender, and we're so
Yes.
lucky to get to work with you. So, big news came out of the Fed yesterday, and you were so gracious to hop on video with me today so we can talk to Premier Plus Realty agents about how to articulate what happened at the Fed and what actions they need to take in their business today before the rest of the week. So,
Yes.
Scott, what happened?
All right. So look, there's two things, and I've been telling people this a lot, Jillian. So we have what the Fed did, but I always say it's more important to know what the Fed says. Their press conference and press release after the meeting is what's most important. So what did they do? They cut the federal funds rate by 0.5%. Now, that does not mean that they directly cut mortgage rates. The Fed cannot directly cut mortgage rate, but things like car loans, credit cards, home equity lines of credit, all of those things, tit for tat, went down 0.5%. So that's good. But what he said afterwards was what I was hoping for, which was, I expect another 0.5% cut by the end of this year, meaning the November meeting. Mm-hmm. Okay, now that's a couple days after the election. Conspiracy theorists can run with that. But then he said that he anticipates another full 1% cut throughout the course of next year. So we're looking at taking the federal funds rate from 5.75 down to 3.75, which is a significant impact on things. So that's actually what happened.
Mm-hmm. And so with that, I know that they're looking at all kinds of data, either retroactively or as it comes in, looking at jobs reports and things like that. And, we're anticipating another 50 bips to be cut in November, but it could be less, it could be more, but they are hoping to sort of, just help our economy. So how does that impact our agents' businesses, and what can they be saying to the buyers, and then maybe we'll go into how they can implement that for their sellers as well.
Absolutely. So look, and the Fed did this. I should have mentioned the Fed did this because the economy is starting to shake a little bit underneath her feet. The labor market's starting to soften quite a bit. I have long said that we've never in our country's history had a recessionary period or had a high inflation period not followed by a recession. By the way, recessions outside of 2008 are good for real estate because rates come down and prices go up, et cetera. So what does this mean? Well, I think we have to set the stage with understanding all of the pent-up demand. And just two quick statistics. BlackRock did a study that they did, median income, median purchase price, today's interest rates, how many people qualify. Then they said if rates went down 1%, how many additional people would qualify? And that number, Jillian, was 5 million new buyers. Okay, now we only sold 4 million homes.
That's more than the projected home sales in the United States, right?
This is a massive figure. Another study by Pew Research Institute said that 52% of Americans age 18 to 34 are still living with their parents. So, and not to mention the Great Migration, people moving to Southwest Florida. So, there's a mountain of pent-up demand, and these people are looking for a reason to go into the market. So the fact that the news cycle today, and has been honestly for the last week or two, is filled with talks of rates coming down, I think is going to lead to a real uptick in the housing market. And if I were a buyer's agent today, it would be very simple. I'd get on the phone with me or somebody on the team and go, hey, for somebody looking in the $300,000 price range, how much more house can they now buy? Okay, because although the Fed's actions do not directly lower mortgage rates, indirectly mortgage rates have definitely come down. And I'm seeing people have additional purchasing power of $50,000 to $90,000 with the same payments. This is huge. And buyers don't know this.
So what about, Scott? Okay, so if they're qualifying for 300, this change could potentially mean that they have $50,000 to $90,000 more purchasing power. What about in this $700,000 range of homes?
The bigger the first number, the bigger the second number. So I actually ran numbers yesterday on a house for $900,000, and this change this increased their purchasing power by $130,000.
No kidding.
Yeah, so wow. I would guess $700,000. I'd have to run the numbers, but I would guess we're somewhere in the 90 to 110 range. So if you had somebody shopping for a $700,000 house, and that's maybe all they were comfortable paying or all they were qualified for, and they weren't finding what they needed. They weren't finding something that scratched that itch. Get on the phone with them, because now we could look at houses of 750, 800, maybe 8.25, and not impact their payment at all. And agents need to find out what the math is at different price points, and then understand what that does from a purchasing power, and get on the phone with these clients and shake them loose. We've had, just yesterday, Jillian, I had 3 people that we were able to shake loose that had stopped looking a year ago. We got on the phone with them. We went over it. They were like, oh my goodness, it's amazing. And I realized that, what do I do next? And I said, let me update your approval. I'll be on the phone with you tomorrow with some updated numbers. So from a buyer's agent standpoint, this is an easy bunt. I mean, this is such an easy opportunity to get on base and shake people off that fence.
Yeah. What about sellers? So you're a listing agent for sellers. Maybe the seller was on the fence because they weren't sure where they would go, right? So there's that angle. What about sellers who have listed their properties? It's been sitting for a little bit longer than they would like. They've had to do several price cuts. How could we angle this news to encourage them or change their strategy a little bit?
Sure. So I'm going to take two different approaches to this, okay? From a listing agent standpoint, if you have gone on a listing appointment and the seller chose not to list their home because they were married to their 3.5%, 4.5% rate, whatever it is, get back on the phone with them, because going from a 4% rate to a 7.5% rate is a lot harder to swallow than going from a 4% rate to maybe a 6 or 6.5% rate. So get on the phone with them and explain to them what is going on with that. Now, if you have a home that is currently listed for sale, look, I think right now we're in a sweet spot of the market. Okay. And what I mean by that is, the sellers are, the market is still such that you could get some seller contribution, okay? And we could use that contribution to buy down the interest rates. I have 2 contracts working now. We were able to get 4% from the seller on one house and 5% on another, okay?
Okay.
We were able to lock in these clients at a 30-year fixed rate. Sorry, my head of security is acting up.
All right.
1 second. Okay. Right at my punchline, but so poorly timed. Anyway, we were able to lock in these clients at a 5 to 5.5% 30-year fixed interest rate. So I feel right now we could get those lower rates in the form, the rates that everybody's dreaming of. We could get those lower rates in the form of seller concessions, and the market is negotiable enough where you can get that. Okay. This is outrageous with the dogs. Okay, so
I really can't hear the dogs very much. Perfect. So you're good. You're good.
So, so once, as interest rates come down and the market heats up, we're going to lose that flexibility with sellers. We're going to lose the ability to negotiate a financed offer. It's going to be a lot of cash. Bidding more is completely possible again in the near future. Now, is near 3 months or a year? Nobody knows, but it's coming.
Yeah, I think we have, the sellers who had that aspirational pricing. Maybe they gained somewhere between 15 to 25% equity in their home over the last couple of years, and then they wanted to profit on top of that, but they didn't really need to move. So I think we have some non-serious sellers in the market right now. But if as you said, we have those sellers who are realistic, who really do need to move, now we have a way for them to go somewhere with a rate that they're comfortable with. And then we have options for them to offer rate buy downs and things like that for the buyers. And then the buyers can, it truly is, I mean, it sounds silly, but now's a great time to buy, it sounds like something you should always be saying as an agent, but it truly is. I mean, for a well-qualified buyer, I know you and Ed are able to lock someone in at 5.5 to 6.25 for, whatever the circumstances may be. So it's not out of the realm of possibility for buyers. And this is just good news all around, I think.
Yeah. And look, another thing that people need to understand is that if you look at the average 30-year fixed rate mortgage over the last 40 years, the average is actually in the mid to high 7s. So rates are good. People just have recency bias. And another challenge that everybody's dealing with, and it's fair, is inflation, because gas is more and groceries is more. My son turned 19 yesterday. I bought a cookie cake at Publix just to give them something,
Mm-hmm.
and it was $23.
No kidding.
Like
Yeah.
that's a lot of money for a cookie
Yeah.
cake. So every American is dealing with financial pressures from all fronts. So this is an area that can provide some relief. There's also an amazing opportunity to refinance and do some debt consolidation. I'm doing quite a few refinances now. There's one client that I'm able to replace his mortgage, drop his interest rate about 1%, but more importantly, pay off a bunch of debt for him with the equity he's built up and save him about $1,100 a month. This is life-changing for people. So for anybody's out there who has clients that maybe they're struggling financially, that they've closed, or maybe themselves as agents are looking for a little relief, because most people are, this is a really cool opportunity. If you bought your house in the last couple of years, to give us a call and talk about refinancing, because there are some creative things that can be done. But big picture, here's the deal. We're in a market now where you need to work with the lender that has some strategic and creative ways of structuring the deal, okay? Getting a deal in, throwing an interest rate at them, not talking about buy downs, not asking for seller concessions, locking up front, right? As interest rates are coming down, we shouldn't be locking that interest rate when they go in the contract. We should be locking that interest rate as late as possible. And it's super important that we're not in a click button, get mortgage scenario where we're talking to a professional that's local, that understands the market and knows how to structure a deal to really maximize the savings.
If anyone knows that principle in business, it should be local realtors, because certainly an agent could do a click button home purchase with some online service and some robots with or disengaged human. But I think the value of a local lender who knows the market and what strategies are working in this market, in conjunction with a local realtor, is a team that is the most consumer friendly model way to go about it. So Scott, thank you so much. If just one quick takeaway for our agents working with buyers, what is the 2-sentence phone call that they need to pick up the phone and tell all of their buyers right now?
Hey, I don't know if you heard, but something really exciting happened yesterday that massively increased your purchase price, your purchasing power. Do you want to talk about it?
Love it. Thanks, Scott. All right, we'll see you soon. Have a great day.
All right, Jillian, thank you.
Bye. Cool. All right. Thank you. Thanks for doing that. I really appreciate it.
That's fun. I got to be honest, this would be a good thing to do with some sort of regularity. This is like real good messaging.
It is, and it's just conversational, and we're just out, and we can cut it up and all of that. So I think that's awesome. Yeah. Well, Thursday mornings with Scott. So
I like it.
Yeah.
All right, hon. I appreciate you. I got a 10 o'clock, so I got to jet.
All right. See ya. Bye.
Bye, Jillian. Thanks.